One.
The melt up is on. Instigated by Powell in the early pivot. We're going to talk about the dash for trash, buying everything. Almost all the top components in the index were up yesterday. Microsoft down a penny. Dennis had the busiest day of the year. So let's get to it. It's Thursday. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. We are up 16 and a quarter handle, similar to yesterday. Barely saw any ticks below that closing price of 60.75. Pre-market high 47.81 and a quarter, and maybe getting that 4,800 handle today. Haven't done that since March of 22. Buck in the red again, 50 cents, 101.97. Bonds catching a wicked bid up 1.25 point at 122 and 28 30 seconds. Crude back in the 70 handle, getting stubborn, up $1.38 at 70.85. And gold, holy mackerel, up 54.90 at 2,052 and 10 cents. Silver 22 handle yesterday, and now in the 24 handle. That's up $1.42 at 24.35. And Bitcoin futures, they're a little quiet here, but they're in the green, $155. They're in the green, 43,365. When Triple D says he has the busiest day of the year in after hours trading, folks, that means it's a busy day. Dennis, come on in and tell us what you were seeing out there.
Crazy busy day. Just everything moving. And when I mean everything, everything. So they were buying just dash for trash across the board. That's what you saw happen yesterday, obviously, on the Fed announcement that they are pivoting, which is exactly what it was. And that has continued. So it's interesting, though, because you actually are seeing, some of the mega cap techs like Apple really not participating here this morning, Microsoft. And we're going to talk about that in a few minutes because I do think that those stocks were doing well without the pivot. So you wonder if those don't lag here now going forward a little bit because you all of a sudden have a pivot and people are hungry for stocks that are interest rate sensitive.
Oh, there's a bunch. I mean, I saw the banks ripping yesterday. I mean, what was left out? I guess is the only question. I guess. I mean, oil rallied. I didn't look at the heat map, but man, there was hardly anything in the red. But when you're talking specifically here in the dash for trash, I mean, you got a firm now up $1.35 here. That is approaching some monthly resistance at 48.95. Just it's a buy fest, and I am frankly surprised that he did. He said, "What did he say? We're reviewing rate cuts." Was that Mitch? Let's bring in Mitch here. Maybe he has some of the
Yeah.
verbiage on that. What was what did the street catch and just go to lifting offers?
I mean, of course, everyone expected the key interest rates to stay steady, right?
Mm-hmm.
That was a common given, right? But now plans for multiple rate cuts in 24, that was not expected, right? I don't think we
Like,
were
why
even
say it?
expecting. Yeah, exactly, Dennis. That's the important thing here, right? Because it doesn't mean that they're actually doing it, but why say it is more important, I think, here.
I think, like, I have a thought here, and I honestly didn't consider that he would take a victory lap.
Yeah.
I didn't think that Powell was going to be. I thought his focus was on inflation and fighting it. And basically, yesterday he took a victory lap,
But
saying
he
we've
also threw
done
in the
the soft
towel.
landing. We did the soft landing, and now we can pivot and we can bring it down. He's going to slowly try to bring interest rates down because he's beating inflation. Could keep the market as high as it possibly can too. So it was a victory lap for him yesterday.
Mhm.
And, maybe it's warranted, but you'd think, like, why talk it up and start inflation once again here? Because all you did was blast off everything yesterday. And I mean, if you're so concerned about inflation, asset inflation is going to bring it all back here too. But we cannot control what Powell says or what he does. All we can do is trade the markets that are given. And we got a lot of new information yesterday. I did not think that they would actually talk about cutting rates yesterday. So that's got to change your course. And I mean, again, it doesn't mean recession's off the table for 2024. It doesn't mean anything, but it means this is like a hell of a perfect setup for this year. We talked about strength into the end of the year. Oh my gosh, what a setup. I mean, could we just blast off to all-time highs and actually be at all-time highs for the end of the year? That's a juicy setup.
Well, Powell carrying the Bulls and doing a little bit of that pivot talk, the famous Friends pivot. And you're trying to get a couch above.
Oh,
man.
yeah.
It can be very
I remember
hard,
that episode.
right?
Good episode.
Pivot. Well, hey, he's yelling out there. One thing that they said in this report that was really interesting was also the comments on inflation coming down. They said that they foresee core inflation dropping to 3.2% in 23, 2.4 in 24, 2.2% in 25, and then eventually aligning with the 2% target in 2026. This is why I mentioned, is this also a throwing of the towel on inflation, where they're just saying, well, like Joel had mentioned, I think like 2 years ago, there might just be a new norm of inflation.
No way.
That's one of the things he mentioned yesterday. We're okay with where inflation is now. We think that it's just going to slowly adjust itself back down, and we're done with that battle.
It's a victory lap. He literally took his victory lap and saying, we beat it. It's over. We beat it. Now we can start thinking about cutting rates. I did not think you'd do that when the stock market's at all-time highs. I did not consider that was even a possibility that he would do that. And it's actually disappointing just to see that, a Fed official wanted to take that victory lap, but that's what he did. And I'm calling it that, the victory lap. He's more concerned about his own personal, like I am the best Fed official ever. I beat inflation. And I did not think Powell was like that. So I just changed my opinion of him. But that doesn't matter. What matters is the response. And the response is predictable. Nobody thought he was going to talk about cutting rates at this meeting yesterday. Nobody thought. Everybody thought he was just going to stay the course, talk the market down a little bit. He did the exact opposite. So, I mean, you have to take that new information. How do you take that new information? You buy everything that is interest rate sensitive, meaning and that's what we saw happen yesterday. And stocks that have been beaten up because of higher rates are the ones that they were buying the most yesterday. I mean, look at the day XLU had. When's it had a candle like that, Joel? I mean, up 3.5% yesterday. These are utility stocks. These aren't AI plays. I mean, this is exactly dash for interest rate sensitive stocks. Banks had a hell of a day. IWM, complete blast off. That continues this morning. Another 3 points for IWM here, which is an incredible run up. I mean, wow. What a run. Bulls totally are in firm control here right now. I am thinking, though, you're going to see some rotation here today, and you can see it early. Would not surprise me if Apple, Microsoft, and some of the Magnificent Seven underperform here. Apple's teetering on going red today. Microsoft is teetering on going red today. The reason, again, you got to think, it's not a buy everything. It was buy interest rate sensitive stuff. Apple, Microsoft were working in the old environment. Does that mean people trade those in for this interest rate sensitive stuff? I think that starts happening today.
Apple has to go to 200 first before it turns around, as far as I'm concerned. But Microsoft was a little weak yesterday too. But yeah, they're up just a couple. Now Microsoft just went red. Go ahead, Mitch.
No, I think this, of course, brings a good question. The chat's asking it too, so I'll bring it up. Right? Does this new change in what we thought was a hawkish Fed turning more dovish, does this change our perspective going into 24?
I think so. I think you have to a certain extent. You can't come in because if he's going to attack, if he's going to talk about cutting rates and the market's at all-time highs or close, Dow Jones Industrial Average made a new all-time high yesterday. Qs are very close. SPY's very close. He's going to talk about cutting rates. I mean, he has so many bullets in the chamber. So I just thought he was tougher than this. I didn't think he cared that much about his own, saying that, yeah, I'm the person that navigated the soft landing, the first one ever. I didn't think he cared about that. Now I realize he does. So I think it does change. Am I chasing stocks here? No, it's been a hell of a run. But, you'll have an inevitable pullback. But does this mean I do think, the economy's teetering here, but if he starts lowering rates right away or start talking about, and again, if you get some bad economic data, he's going to lower rates. He already talked about it without bad economic data. So many bullets in the chamber. Hard to be bearish here, at least, especially in the next 2 weeks. I'm so glad, seasonality kept me from being bearish here because I probably would have been bearish on this run up because it's been an extreme run up, but the seasonality keeps me in. So I think you do have to reevaluate here, not chasing stocks, but you definitely need to reevaluate that this Fed is now accommodated to the market.
I'm going to pull out my crystal ball here, and
Uh-oh.
I'm going to make a prediction. And I'm not going to go too far out, but I think Powell's ready to retire.
Yeah, he wants to, and that's maybe why he's taking the victory lap. He's going out on top.
Yep.
Going out on top.
I mean, the election year next year, who's going to be in the administration? I mean, he navigated a pandemic. I mean, he's just going to do it. That's what I think. I think he's taking his victory lap, and I think I don't want to say imminent, but just wait for that. And I don't know how the market will react when he makes that announcement, but it's just, one of my wild theories in the back of my mind.
I don't think it's that wild. I think
Really?
maybe the victory lap does set this up here, and he's got lots of bullets in the chamber. I mean, he's in good shape, Joel. Let's be honest. He's in very, very good shape now, meaning they have the rates are high. The economy's actually done pretty well, and he can lower rates if the economy starts to teeter. Whoever he set up next, Powell was actually given probably a pretty bad hand when he came.
He was. Yep.
He's setting the next person up for a very good hand. You got rates that you can lower infinitely, it almost feels like, if the economy starts to teeter, and he can just manage it. If inflation starts to go up, if inflation starts to take off again, you're going to have some work to do because rates are already high, and I don't think he can go much higher. But, as we know, they cook the books on that a little bit too. So, I mean, it's hard to be bearish here. I want to find a case to be bearish. I like being bearish. It's kind of fun. Pisses people off.
Because no one else is.
Seasonality hasn't allowed us to be bearish here in the last 2 weeks, 3 weeks, 4 weeks, really. We thought the stocks were oversold in October. We talked about that. I tweeted if you go look at my Twitter feed. But, I mean, I've been calling 2024 to be rougher. But if the Fed's going to be accommodative, meaning they're going to start lowering rates without even having bad economic numbers, well, how do you fight that? Don't fight the Fed we're back to again.
I'm sorry, Mitch. Go ahead.
Well, I just wanted to bring in, of course, and you guys know this more, right? It seems like this was done also in the 1990s, where the Fed policy shifts help avert or mitigate a recession. And so do you feel like this is what's happening here? Is this kind of Jerome's way of stopping the recession by the talk of interest rate cuts?
I don't know. Maybe.
You know what I mean? Kind of like some financial engineering here.
This is a good point, Mitch. Maybe we're in this situation where he kind of can read the tea leaves like we're reading the tea leaves. Is Canada's in a recession right now.
Yeah.
Official recession with the 2 consecutive quarters of negative GDP. Maybe he's reading the tea leaves that, the consumer is getting a little bit stretched, and we don't want to get to the point where we start getting bad economic data and then we start losing the economy. So maybe he's just trying to stay ahead of it. Maybe he's just smart. Maybe he's all over.
Instead of letting it hit, right? Instead of letting it hit, just put in front of it, the rate cuts could come, and maybe that could hold the market enough to get through this soft landing narrative and really actually achieve it.
Possible.
I just looked it up. Yellen was around this age when she retired. Jerome is 70. So I don't know if that's any kind of precedent, but we'll see. But for now, let's talk about
what
something.
does this mean for the market? It's if we are going into the end of the rate hikes, and again, this is good for the bonds. So you've got to be buying bonds on pullbacks. I'm now up 11% on my TLT long-term position. I wish I had a lot more. People say, why buy the TLT with a 3.5 or 4% dividend? Because you're up 11% a month.
Yeah,
So
we
this
were
is
talking
why.
about that.
And again, people like Rick Santelli talking about 12% interest rates when the TLT was right at the bottom.
Ooh.
He bottom ticked that. So it was the Ackman bottom, but it was also the Santelli bottom too, with just stupidity. And talking about 12% interest rates, that was when we had we were talking about the 10-year up at 5. It's now down at 4. I mean, he top ticked it. He couldn't have been more wrong. So Rick Santelli, absolutely wrong. Ackman, absolutely correct.
Yeah, I changed the market. This guy, Ackman again, man.
Ackman did.
He's
That
a
was the
monster.
Ackman bottom. It was also just people panicking. Oh my gosh, 12% interest rates. What a stupid thing to say.
Yeah,
Like,
I would.
when we talk about the dumbest thing to say of the year, it's got to be Rick Santelli's, and I believe it was 12%. So part of me thought it was 14. Was it 14 or 12? It was just a ridiculous number, though. Oh, technicals are showing that we could go to 12% interest rates. No, we can't. There's no economy left. Me and Joel were saying that was the dumbest thing at the time. And that was the time to go in and buy bonds. That was the bottom. 13. Somebody was saying it was 13. Oh my goodness. What a bad. That's got
I
to be
wonder.
one of the worst calls ever from CNBC. Worst calls ever. And they were promoting it because they were getting
Yeah,
hits on the articles.
that's what it
That was
is.
just
It's
ridiculous.
it's one of those headlines where it's almost like the media is literally like, "Man, thank you for that one. We can put that one up everywhere," and they'll click.
Oh, yeah. And everybody's clicking it. What do you mean
Yeah.
12% interest rates? Everybody clicks
Dude,
that.
what do you mean?
12% interest rates. What's going on here? They read it and it's just like, oh yeah, chart looks like maybe we could go 12%. That's stupid. Dumb. Ignore
Yeah,
dumb.
and I
Ignore
mean,
dumbness.
the recent rally also came on some comments from the Fed that were mentioning that we could get a rate cut in even spring. So I think now we need to just start looking at when that potential rate cut could be coming. Yesterday, I took a look at that. Of course, I wanted to see when it got into the high percentages, not like 17%. But in June is that first big jump, right, in the expectation and probability for an ease. So that's one thing that we can be looking for, right? Is that it's not said that it was going to come in March here, is that it's said to come in June. So that's, 6 months out, essentially. All right, let's move to Adobe. Adobe's biggest earnings of the day, Q4 EPS, $4.27, beats the $4.14 estimate. Sales of $5.05 billion, beat the $5.03 billion estimate. They see fiscal year 24 adjusted EPS at $17.60 to $18 versus an $18 estimate. Total revenues at $21.3 billion to 21.5 billion on the high end versus a 21.73 billion estimate. Also seeing Q1 EPS 435 to 440s versus a 426 estimate. So at least for Q1 adjusted EPS looking good. The overall fiscal year EPS a little bit lower, even on the high end, would just hit that estimate. So I think that's what affected Adobe. But as you guys can see, the buy the dippers out there.
You're not going to shake them. And right now we're in like panic mode for money managers now. So Oracle 2, I mean, we called this one. We don't call everything right, but we called this thing tick under 100, undercut and rally. $99 is what I said. 99.26. I said this one was 104. 99.26. It bounces yesterday. The undercut and rally perfectly. Sometimes you can just call this stuff. Sometimes it's like simple setups. Adobe,
Good day,
it
a
is
good
fine
day, it was a good day in the market for Adobe, right? I
for
mean, it
Oracle
was.
and Adobe
Oh
both.
yeah,
Yes,
I mean, Oracle.
and
I mean,
both.
Oracle. I mean, people are like, oh, look at this at a discount. Adobe, man, this thing is just a wild child. Technicals when you have a $600 stock, I don't think you're getting anywhere back there to the pre-market low. I'm not sure what the straddle was on this one. I'll just look at yesterday's range. Keep it simple here. The bottom of yesterday's range was way up at, that's not too far away, 618. So if you're playing for a scalp and looking for a gap fill, that would be the bottom of the range. And then I'm sure after seeing it trade down to 560, I'm sure a lot of people would love to see the mark. It's 624.26. But as far as having a couple lows in the same area, boom, I would look at the 575 area, but I don't think you're going to get back down there again.
Yeah, very hard to come in and start selling Adobe down $50. I mean, that was like just on a day where every money manager is jaw dropped from a pivot that we did not expect to happen yesterday. You get Adobe at a 50-point discount, the money managers are coming in scooping it up. And that's already happened. It's already down 25 here now. It's happening in Oracle. It's buy the dip, man. It's buy the dip until further notice.
Some people are talking about in the chat about how maybe the AI art and generative art from Adobe not getting as much love. But remember when this got announced, and I still remember the day I brought it up. That was in May 26th when they started releasing out their AI products. Look where it is now. That's 60% higher. So has it gotten some AI love? I would definitely say so.
I think so.
I mean, 60% higher in a couple of months. You guys can see it there. I don't think this is a company that is going to struggle with AI products. They're going to continue to come out with more and more and more and more, and they won't stop. All right, let's go to Jable.
Yeah, sure. We'll do the other one. It reported this morning.
Yeah, Q1 adjusted EPS $2.60 up from $2.31 year over year. Sales at $8.39 billion, down from $9.63 billion year over year. They expect Q2 revenues at $7 billion to $7.6 billion versus a $7.34 billion estimate. Adjusted EPS of $1.73 to $2.13 versus a $1.93 estimate. And the fiscal year revenues are at $31 billion versus a $31.6 billion. We'll see what happens here. What do you guys think about this one? This isn't one that I trade often.
I took it through the report short.
Okay.
It was up to 122.95 last night. I was able to get short. So somebody was giving me almost 2.5 point lead. I was like, I'll take it. I covered it here just, for the $1.50 right in this area here, this 121s. I had no opinion on it. It was just like that. Sometimes it's simple. Somebody wants to pay up $3 ahead of a report. I was like, I'll take a shot. I don't know what to say. This is like a nothing report. They beat by 2 cents. It's sitting here. It's kind of a nothing chart too, really, Joel. Like I could throw it to you, but you're not really up in that gap area here. Maybe if you could get above like 122, then you start getting in that gap, and maybe it starts going. But it's kind of like a nothing report.
You're on mute, Joel.
Joel, you're on mute.
I said
we got to remove that button.
I was thinking when I'm thinking, I'm like, I'm going to unmute, and also when I
talk, I'm not allowed to have a mute button.
But then you want to hear me cough and burp?
I'll keep it. I'll keep it.
You don't want to hear Joel's belching.
I'm down. I hit the like for that.
I hit the like. I'll hit the like too.
Okay. There's a narrative. There's a narrative behind this stock here, right?
Yeah.
November 28th, they come out and they give you bad news, right? And they provided the guidance. They absolutely kicked the living daylights out of it. And then a couple days later, if I'm not mistaken, this was added to the S&P, right? Was it one of these the stocks that was going in the S&P?
I don't remember.
Actually. Yeah.
This one's a little bit harder, but hey, Joel, remember?
Yeah.
We got the goldfish memory. At least I got the goldfish memory. Joel remembers things. Whenever I challenge, I was like, I think you jumped that up.
Yeah, I don't even stress it.
Actually did happen. He remembers everything, this guy.
Yep, he's right. He's right.
He's right. Of course he's right. He remembers everything.
You got the little boost, but I mean, I don't know how happy I'd be being short this thing above this 121, right above this area. Because you're just got a gap area, has no memory. So, and I looked at a lot of charts from yesterday, and they, you look right instead of left. They opened up at like the previous day's high, maybe went, red by a couple ticks, but then that was it. So I'd look for the early setup here in Adobe. Just nothing. I mean, in order to get a gap fill here today, one at 29.21. That's a ways to go. But see if it holds a bid here early. I'd watch out on the short side for Jabel's circuit.
Jabel.
All right, guys. I do want to give at least a little preference of what's coming, of course, at 8:30. All the chat's already all over it. So let me just at least mention we will get retail sales, we will get continuous jobless claims, initial jobless claims. The expectation for initial jobless claims is 221,000. If we look at retail sales, month over month, expected to come in at negative 0.1. So the prior also being negative 0.1. I'll keep an eye on that. Year over year was at 2.48 on the last measurement. We'll see what happens when this comes in. And of course, we'll keep up with that as it hits the tape. That's at 8:30, guys, in about 4 minutes. Let's do a quick.
Any dip. There's just so many buy the dippers lurking here.
You can't break
myself.
this. Like
myself,
sometimes
I'm a buy the dipper.
Sometimes, Dennis, there's like a Max Payne trade, but I don't think that is it right here, because the truth is I still have been seeing some bears out there, and I had to slowly but surely get off of that horse, because that's what we need to do as traders, right? When we start to get to this point where, hey, you're expecting a turn, you're looking for a turn, you're looking even for a lull in the market, and we did get some sideways consolidation, but it was at the top. That showed strength. It wasn't just quick moves right back down. So they were able to hold it and get those buyers to rebuy. And now you're seeing the stocks is continuing to take off. This is why I've talked about on live trading yesterday that, especially if you're bearish and you're waiting to see this big move down, maybe wait to see the reaction first versus front running it.
Sometimes, striking early is not the thing to do. So I'm with you there, Mitch.
Because there could be a underlining bubble in this market right now with AI, right? And that could be what's just driving the prices further. And I know that a lot of people like to sometimes look at the market logically. That doesn't always work. I feel like we're in this exuberance right now, and when we're in this time, story can just continue driving stocks. Fundamentals sometimes don't matter. Even technicals don't matter, because if you look at RSI on certain stocks, it's going to tell you that it's
overbought and oversold.
Overbought. But that doesn't mean anything.
Those terms, I mean, you can lose a lot of money shorting things that overbought, and you can, and you can lose a lot of money buying things that are oversold. That's why we try and keep to the more, simple technical patterns and stuff, because those levels can. They can persist for quite some time. That's why I like sticking with with the daily levels, some certain retracements and stuff. But what Dennis always says, if you're good using those kind of indicators and that's how you make your bread and butter, go right ahead, man. Go right ahead and use it.
Again, whatever we say on this show, if you're consistently making money doing the exact opposite of what we say on this show, do it, man. Like, the P&L is the bottom line. If you're struggling and you can't make money, that's when you're listening to how other traders are trading. But if you're just killing it all the time, using your charts, your technical setups, and we poo-poo it one time, doesn't matter. Results speak for themselves. It's all about results. That's what matters in the end. It isn't opinions. It isn't about being right. It's about making money. That's what matters.
I think most of our sophisticated audience here is looking for a different outlook or a different perspective on something they're having, or we may totally agree with what they're looking at. It might give them a little bit more conviction, and I love it when you guys point out those kind of things, and that's what we're here for. 8:29, Dennis. Do you need to go wide on this?
I haven't. Should I?
What the heck? You don't want to get picked off.
I don't want to change out. You know how many orders I got out there right now? I'm going to get picked off bad, aren't I? Am I getting picked off bad?
Ruin this party right here, and I mean, you would have to get a real initial jobless claims.
I'm having a pretty good day. I don't want to really get picked off on a whole bunch of stuff here right now.
No, you just like to pick people off.
You tell the truth.
I like to pick people
off.
Tell the truth. That's true. I like to pick people off.
We like to do the picking.
We haven't talked about the penny jumper or anything like that. All right, up 13 3/4 handles, 47.70.
We go. Okay. HFT is 2 points wide in the S&P right now. Oh gosh, no, I'm getting hit.
Oh gosh, I'm getting hit.
No, just on two stocks. Bang, bang,
just wide.
Those are both good buys.
I'll take those.
I'll take.
No, Dennis
Bob
just
Wright
pulled.
used to trade. He'd be on these numbers, he'd be on the both sides, and he's like, "Man, I got filling my bid, and I got filling my offer. This is awesome."
I know.
All right,
He
guys.
never
First
moved.
number in
All that
already,
nuts, he never
guys.
moved. I move. I'm scared. He never moved.
Core
He's like, "No,
retail
you sit out there,
sales.
you get filled up both sides."
People
Core
don't
retail
understand what you're
sales
talking
coming
about.
in
No,
here,
they
guys.
do. They
Good
do.
number here, guys. Month over month number for November coming in at 0.2 versus the negative 0.1. So showing what?
Ooh.
Some pretty good strength there in retail sales. And that's from the core. Initial jobless claims coming in at 202,000 versus a 220,000 estimate. So still light on the jobless claims. Retail sales month over month, 0.3 versus a negative 0.1 estimate, prior being negative 0.2. So getting a nice little jump there. Retail sales. Man, how's the XIT doing on that? Man, the XIT is 70.55. One thing that this is one stock that sometimes, Dennis, we call turns, but then we sell them too quick. This is a clear example of this one. I sold it on the first rip up there towards 64. I had it at below 59, guys. But this one, I didn't hold on to it long enough.
We always sell too soon, me and you, Mitch. We
gotta hold. We gotta hold, man. We gotta hold sometimes because
I know we don't
imagine
hold well enough. You gotta hold those trades. Hodl those.
Yeah, just when you think, I remember back in October, I'm thinking, man, this is, when we were just hanging out in those areas, I'm like, it may be a time for one of those talks, like, maybe, seriously do some lighting up. And then I'm like, no, she's not going to listen anyways. So, nice.
Your
nice.
best. She does well overall. Just hodl.
Hodl, baby.
Hodl, baby.
Someday, let Dana and Emily take care of
all
the
What I was saying,
problems.
I don't know if I tweeted this yesterday, but I was thinking maybe I tweeted it. But if you stay bullish long enough, eventually you're right. Tom Lee style. You stay bullish forever.
True.
You're eventually right, because eventually the markets come back. I mean, they always have. I don't know. So if you're a long-term investor, just buy good companies, reasonable valuations, buy dips, you probably do pretty well.
Can you tell?
I don't have the luxury, because the last 2 years where we've gone nowhere in the S&P, if I was only hodling, I would be up nothing in my trading account. And I've over doubled my trading account in the last year and a half. So, I mean, this, trading does work. Market timing does work, and shorting stocks does work, but you got to be careful with it.
Really important point here. I know that, I'm just thinking not all stocks are participating. Peloton's not participating. But
it is a little bit.
Yeah,
$6. It was $5.
You just want
That's
more,
a pretty
man.
good run.
Yeah. Maybe I should just
Joel.
load up here and have Amazon buy it. Yeah, right.
I'm the same way on my Genie. I'm like, yeah, just keep coming, man. Just keep coming back.
There's a couple. I've had some other dogs like that over the years.
But one thing
you just forget about them.
I think it brings it all in the conversation. Will Kathy maybe have a good 24, guys?
She's been so quiet.
She's hot right now.
She's gotten through. She's gotten through all the bearishness.
But still, though, look at that. Look at that monthly chart, though. You can't be happy. I mean, look at this thing. It's
tough.
I mean, maybe get a major breakout here. I would say the high for the year is 51.33. It got to 50.17, trading up 69 cents today. I just want to go quick to the technicals here. It took me about 30 seconds to do my levels in the S&P yesterday, because there's nothing in here as far as, very little resistance, and support, was the closing price, if you missed that last night. But the only thing that is developing from this morning, and what I'm going to be keeping a close eye on, is this 47.71. I know it's only 3 handles away, but that's like just a mild pullback on the session. So there ain't going to be no hope for the Bears until they can bust this thing at least get it and keep it under 47.71. Your next daily high came in on April 4th, 2022, at 48.08 and a quarter.
Can you imagine being short right now, though? Like here, we talk about, I'm underinvested in my long-term account. Still am, but the underinvestment doesn't feel that bad, because I'm getting like 5.7% on the cash components. I'm half stocks, half cash. It doesn't feel like insane. But can you imagine like having your account actually short right now? Like that's why you're seeing like this relentless buying and Upstart, you know, and Affirm and some of these companies going up 20%
man.
yesterday.
You
That's
don't want to
not
be
just
fighting that.
people FOMO. That's people who are short these things and saying, "Oh my goodness, it's not FOMO. I'm losing serious money here."
Yeah.
Like
Do we have some Bitcoin
right now
news
would be
here?
really bad.
Do we have some Bitcoin news?
No, it's just reacting with the market. But let me go look. There has to be something there.
Bitcoin leaking.
Yeah,
Let me take a
Bitcoin.
look here.
But that won't last, right? The buy the dippers will come in
I'm
and
still
that.
on Bitcoin.
I mean,
I don't
it's
know.
been
I'm not
moving
long
with
a
the
ton
Nasdaq,
of it,
right?
but I have a little bit of money in Bitcoin.
I'm looking
I
around.
actually remember we had the Bitcoin year. Joel nobody played it better than Joel. He bought like 8,000 and sold it like 17,000, doubled his money in like 3 days and never traded again.
As we were doing the Bitcoin show. We should probably dig that up. We should probably dig that up and replay that. We did that in what? Was it the end of 2000?
Was it at the highs then, or when was it?
No, it was before the highs. It was long before the highs. It was the futures were trading. I believe it was at the end. I don't know if it was the end of 18. Then we did put the top was put in there. I think it was at the end of 18, and then it had to sell off, and then you can see the base that it built in 19. But I'll just alert on Bitcoin. I know it's a 24-hour market, so whatever chart you want to use. But on the futures, 43,600 is a pair of tops to keep an eye on that. And the open interest is leaking a little bit too. So maybe some people are peeling out. No sign of a reversal day.
Okay, like always, I'm doing this on the fly, guys, so I don't want to say that this is 100% the reason, but like always, I like to do quick research for you guys here in the background. This is what I found. There's a message from Ledger that we've identified and removed a malicious version of Ledger's Connect kit. So, of course, Ledger is how a lot of people keep things offline, right? In cold wallets and things like that. So this came out 4 minutes ago. And they're clearly trying to state here that they were not compromised, but I'm seeing multiple reactions all over the internet, things like this, like memes and stuff, bringing that conversation in. So maybe that's what's affecting it here. Of course, I would tell you guys to look into it, but that's just what I see on the street right now. Of course, if you guys see anything else, chat, throw it up in the chat. We'll make sure that we catch it.
Are these cold wallets really safe? Like 100% safe? Like nobody could ever get it? The Bitcoiners will tell you yes. But like all I think about is if somebody came to your house, put a gun to your head and said, "Give me your 16-word code," you're going to give it to them. But is there other ways? Like that's a weird scenario. But is there other ways that they could be hacked? Is there ways? Like I'm not a crypto guy. I have a little bit of Bitcoin. Mine's not in a cold wallet. Mine's in an ETF. So maybe their ETF gets hacked and all my Bitcoin goes away. But it's still like before it becomes the currency of choice. Can it be hacked? Like, can those cold wallets be hacked? I'm asking the chat as well.
Yeah. So you can see here, guys, people putting out posts like do not use ledgers, don't interact with the data. Like people are trying to put warnings out there. That could maybe affect Bitcoin, right? So that was put out 4 minutes ago. Is that when we got the drop? Like 4 or 5 minutes ago?
Yeah, a little bit longer. So people that had the super extra had the
super fast internet.
Yeah,
super fast
828, 829 is when it happened. But they came in, bought it. I mean, they bought it well ahead of yesterday's low. So just a little Bitcoin tangent there.
Yeah, I'm seeing seeing articles about supposedly 300 million were stolen yesterday, reached Bitcoin mixers in 23. So if you're in Bitcoin, go take a look into that, guys. Of course, we're more in the stock market, so let's bring it back to that. Let's go to Moderna. The release of new data showing the use of Moderna's mRNA 4157 and Merck's Keytruda drug to treat melanoma cut the risk of reoccurrence and death by almost 50%. And those stocks seem to be hot yesterday. One thing that I clearly caught on early yesterday in the rotation was just how strong healthcare was. That's why I went on a swing from Lilly. But let's talk about these two stocks, Moderna and Merck.
Merck?
Yeah.
Sorry. I didn't know.
Merck.
Merck is Moderna. Oh, wow. That drug.
What do you mean Merck is Moderna? I'm confused. I didn't know Merck was
No,
anything to do with
so
this.
it's both of them. So they both
Oh,
have
Merck's
drugs.
involved with this drug?
Yeah, so they have
Oh, gotcha.
Keytruda drug,
Okay.
uh, and so their drug, the
Keytruda, the
Keytruda,
drug that cures everything.
Yeah,
That's
Merck.
a,
yeah,
that's the
pretty
drug
much.
kills everything, apparently.
Yeah, so both of these companies are getting the lift on this.
It's such Moderna's so hated here, and again, we're buying hated stocks right now, so maybe it lifts for a day or two. I don't know. I can't get on board on this one just because, and again, the company has been running great. They were one of the first ones to get it out there. You compare it to like Novavax, and there's no comparison at all. But again, people just aren't getting the COVID shots anymore. So is this a way to diversify themselves away? That's what it needs.
That's
So
what
this
they.
is good
Yeah.
news.
That.
This is what
Yes.
it
Yeah.
needs.
Yep. No, and I've talked to different people about this stock, and they think eventually, like when a lot of the new vaccine, not necessarily vaccines, but cancer treatments are going to come from their technology. You got a nice pop over $88 here. Pre-market high comes in at 88.77. Nothing there on the dailies. There's a couple highs though it like the 87.50 area. So I'd be a little if I was long this thing, if I was buying it off the open, I'd want to see it like 88 bid in a heartbeat and just 88.90 and then maybe throw it off or out at 91.69. But it's important to hold this area. Dennis, you also talked about people buying stocks that haven't performed. This is a stock that it's off its November low. But make sure whatever, if you're really aggressive buyer, make sure it holds and takes out that pre-market high real quick. Coming back on the downside, you got a long ways to go to get to the top of yesterday's range, 78.72. Merck is not moving off this. This is like probably very small for them. Full
Nothing
disclosure,
for
I've
them.
been in Merck, I believe, since sometime in 2021. Just hasn't been a super sexy stock lately. We hardly even talk. I can't remember the last time we talked Merck
It's all
earnings.
Lily. That's
I
all they
like this
talk about is
turnaround
Yeah,
Lily.
though. From 100, it's a nice turnaround there. At least I would say. So that's a nice little hold of 100. I feel like buyers stepped up there. You see a lot of volume come in when it cracked 100, when it went to 99.80 on that week. So
I
that's
think
one thing that I would say. I think some buyers stepped up there.
Yeah, I mean, these valuations are getting attractive for these pharmaceutical companies. And if we are going into an interest rate environment that isn't up anymore, this is actually good for healthcare as well because they have a lot of debt. They do a lot of financing. I bought Bristol Myers a couple of weeks ago because that insider buy happened. And actually,
I
I
remember
almost
that.
got the exact bottom. I think I bought in the 48.50 or 48.70. I never do that, but I bought almost the exact bottom of Bristol Myers. It may not be the bottom. Maybe it continues to go down. I'm definitely trying to catch a falling knife here. But, my long-term portfolio, I buy good companies at reasonable valuations. I feel like Bristol Myers has come down far enough. I feel like Merck's a reasonable valuation too. I had Merck in my long-term portfolio forever. And I sold it like around like 95 or $98. I'm not too far away from where I sold it originally. I probably should have just held it. I wouldn't be against, putting some of these big pharma in your portfolio. Even Pfizer at this point in time, I mean, it's just destroyed. But sometimes the best buys are when everybody else hates them. So in your long-term portfolio, not in your trading accounts.
We got something coming out of the chat here that I definitely think is worth discussing. From Brian Heflin.
Okay.
I had it here. I just had it in front of me. He's
Is it this
talking
one?
about. Um,
XBI?
yeah. Do
There
you
you
have
go.
it
I put it
there in
on the
front of
screen
you?
there, Joel. Yeah, I put it on the
Yeah.
screen.
This is worth a little bit of a discussion here. Lower interest rate, right? It's been plaguing this. Now they're look at the day that thing had yesterday and up another buck
That
40.
that's all
So
rates.
let me
It's
repeat
all
Brian's
right.
question right quick for anybody that didn't,
Go
of
ahead.
course, just read it on the screen. We got people that listen in on the podcast live, so shout out to those guys that are audio only. How does XBI compare to other sectors ETFs? Isn't the IWM heavily weighted with biotechs also? So you guys go ahead. What do you guys think about this?
Yeah, well, IWM has a little bit of everything. It's all small cap. So IWM and XBI are very similar. XBI is like a pure play on lower rates. And that's why they grabbed that yesterday and just run because all those small biotech companies in the XBI need financing to fund their trials. And if the financing costs go too high, they might not be able to get the financing. So all those small little biotech companies that are in the XBI, and if you compare the XBI to the IBB, which is a better comparison, the XBI is full of all the small ones. The IBB is full of, like the Biogens and the more established companies there. So when you're speculating on interest rates, and lower interest rates is good for both the IBB and XBI, but it's really good for the XBI. So XBI has been moving with the TLT almost perfectly for a while. Look at these two charts. They're almost identical. I've talked and I pair trade these together. It's not always going to work, but I've been pair trading the XBI with the TLT because lower rates obviously helps the TLT go higher, and lower rates obviously, it's built-in rates, and then the XBI is obviously that way too. So those two charts are almost identical, XBI and TLT. Whatever TLT is doing, the XBI is doing. A little bit of leverage play on the TLT.
Watch your offers here, Dennis. We're coming up. Continuing
Left and
to make
crazy. Can't stop, Joel.
Can't
Yeah.
stop. Won't
Can't
stop.
stop,
Never
won't
gonna stop, baby. We'll find out. Let's get to, of course, Oxy, baby. Warren stepping up. Berkshire Hathaway increasing its ownership of Occidental Petroleum by acquiring 10.5 million shares, spending about $588.7 million at an average price of $56.16 a share. This purchase raised the stake in Occidental to approximately 27%. It's pretty big there for especially Warren.
Man,
And additionally,
go ahead.
I just want to additionally to remember, right? They also have an ability they hold preferred shares and warrants for acquiring an additional 83.8 million of Occidental shares, and that would be at 56.62 each. If exercised, these warrants would push Berkshire's total ownership up to 33%. So just wanted to mention something to look out for.
I mean, we knew he was going to come back in here eventually. It's probably a buy on dips, especially if rates are going to start pivoting. It's oil stocks are affected by this as well. I think you're buying Oxy on dips. I think Buffett, following Buffett, we talked about the 56 to 58 area. I didn't strike. I should have. I think you'll get another dip. I think Oxy's on my shopping list.
Interesting. I wonder what his average price is on this, because I know
the same range. He always buys in the same range. He might be a little higher.
I think he had an earlier buy, right? That might help him.
Everyone is forgetting about when he bought this thing at $75-$80 with the Anadarko Petroleum.
Did he?
Yeah,
I guarantee it. He did. He was memory. It was part of the Anadarko deal, I believe, and so I know he started there, and then he just kept. I mean, I don't know how much he was down on that position, down at the COVID lows, and I know he bought. He was continuously buying in 19, in 21, 2021. We obviously know that, but I mean, he waited. It's just like the thing kept on. Man, he must do technical analysis or something. He saw the undercut or the low from the other day. Just for the Dennis, you didn't play it this time because he hasn't been. I know you've had a couple times.
Yeah, I haven't been, but I think I start playing it again. I think like now he's back, and he's probably going to continue to be back. So I think you got that Buffett put there. So I think buying at 56 to 57 and flipping it, you can day trade and flip it out of this area.
That's what I was going to say.
I was doing that, but I remember I put in my long-term portfolio and I sold out of the long at 64, so I could re-get it. So
I did some research here for us. I know that we wanted to know kind of average price. Of course, this is from hedgefollow.com, so shout out to them. I don't know if this includes this recent buy of yesterday, so I do want to state that. But what I have here is 50.13. would be his average price that they have. So that's showing that he's up 14.1%.
Oh, he's doing well.
Right. Yep. But I can tell you, if you see that blotter, there's buys all over the place, and all over. If you're buying it off the Warren News, right? You're quick. You're a good pre-market trader. You're trading at the highs of the pre-market session, which is 58.71. Not a ton here. There's only one daily high at this area, 58.70. So let's see. A lot of times on these, they either boom, just catch a bid right at the pre-market high. If that's the fact, then you can look for 59.60 would be your next daily high. If somehow people ring the register off the open, you got a ways to go to get to the top of yesterday's range at 57.27. And Also, in a pretty strong market like this, I don't know if it's going to be pulling back that easy.
I know that we've had such a great show that you guys haven't even realized that we didn't have a guest today, but I wanted to do something special today, of course. So instead of a ticker time, let's do a Santa's list. What would you be watching for towards the end of the year, guys? So that's the way that I'll put this in perspective. You guys drop in stocks in the chat. Let's get through it. Let's see what we can come up with. Of course, I've already given two names that I thought could outperform for the end of the year, AMD and Intel. Maybe you
Yeah.
guys can give one, and then I'll grab some from the chat here.
I gave Palantir yesterday. I'll give it again. It's up
Okay.
quite a bit from where I was looking at it yesterday. So
Yeah.
that's somewhat, we're chasing a little bit because it was at 17.22. I haven't bought it yet. I think on pullbacks here, PLTR, I think that could get the lift here. One thing I would be careful about, and again, I'm going to say it again, is Apple and Microsoft have really been strong. And I think the higher interest rates make people leave those stocks for some of these other ones. So I'd be careful buying Apple and Microsoft here right now. I think both those stocks could actually turn around and go red, not only today, but could show some weakness here because it's a crowded trade. And I think they're uncrowding those and moving into other stuff right now. So just be careful, Apple, Microsoft.
These are definitely not sexy issues, but when you go into the laggard category here, these stocks definitely fit the bill. Ford, I mean, horrible. But had a good year, got up on the year. That's down. Just looks like it's basing. GM, it held that gap. I mean, it came out with the news that earnings weren't going to be bad. If rates are coming down, right, and people are thinking of getting new cars and stuff, I think that that's going to help. So there's a
Okay.
couple laggards. The one that I was really hawking during the strikes was Stellantis. That just seemed to hold up, even with all the talk. So that one trading at its 2018 high. So I just wondered. I know Ford has cut production of their Lightning but GM, I mean, these things have been dogs. Now it's struggling it looks like you. Let's see if we can clear 34 and make another base. But let's see the boring old autos there.
TAN. I know we talked a little bit about the solar stocks, so we might as well
Yeah.
take a look. Pedro bringing up an ETF here that definitely had a nice little push yesterday. We'll call it a power up move. What do you guys think about this? Could this really get moving?
Yeah,
Wow.
this is again interest rates. This is a pure play on interest rates going lower. What has killed solar more than anything is higher rates because it takes financing to buy. Now, is this turning it all around that he's just talking about pivoting? He hasn't lowered rates yet. But if we're going to go into an environment where they're more lowering rates than raising rates, you got to think that TAN might be a buy on dips here. So I think you're looking at solar here now. I think you're changing your minds here to a certain extent. And this actually sets up for even to January, in fact, because it's so beat up. So I think, yeah, you're looking at those ENPHs. And again, you can't chase this. Some of these stocks just had 10, 15% moves yesterday. I don't like chasing stocks. It's just not my style. So you can do whatever you want. It can't stop you from doing it. But I think these are on your shopping list now. I mean, SEDG, look at this turn yesterday
Oh
in this one.
man.
This thing was down at $72. It went to, it's 85 now. It just ran 20% in one day.
And it doesn't
That's
even look like anything. It doesn't
even
even
look
look.
like anything big on the chart. So there could be, and maybe there could be a sustained rally here. And maybe you do want to chase, something like this because it's so beat up. But this is where money is gravitating to, at least right now, because they're saying, hey, if the Fed's pivoting, solar, XBI, stuff like that is all of a sudden a lot more attractive.
8 down months in a row, going from
Oh my
304
God, what a stat. Right.
down to 75.95 was your close of September, and then up a little bit in November, and so far up a little bit in December. But I got a good level for you here, folks, and it's right where it's trading right now. Last month's high 85.12. This month's high so far 85.71. The next monthly high in this thing is 130.38. And that, I mean, you got a gap to fill in this thing first at 113.43. But I mean, it just looks like nothing. It went from 72 to 82 yesterday. It looks like this little bar right here. Amazing. Those things are volatile.
One last one that we never talk about. I can't even remember the last
Never?
time we mentioned this stock. And I would love for the chat, anybody to mention when you think we talked about this, because I got to fact check that one. CP or UNP going to the rail, baby. And this just shows what? So, one thing that I've been talking about with economists is more about the productivity that's showing up in the United States. And so I think that this is where this is playing in, is that productivity increasing. But man, take a look at the CP and UNP, especially. That's been on a big run since November.
Yeah, they haven't invented teleportation yet, so they probably got to continue to use rails. Even though you buy something online, they got to send it from one side of the country to the other. And the most efficient way is still railroad because you can take so much stuff. So rails just don't go away, and they are economically sensitive. So if you continue to think that the economy is turning around, the rails are probably one way to play it.
Let's see. Just looking at CP here, kind of quiet, but bumping up against some resistance. You got a quad of highs right where you are right now. So you catch a bid there, maybe get a look at 76. And what NSC is part of that group too, weren't they? Or did they get taken over? No, NSC, Norfolk Southern, laggards, definitely laggards for the year. So keep an eye on those.
All right, let's go ahead. Let's do a little bit of a recap here. Of course, what's leading the bus. Let's go to Dennis. We'll go to his outlook. We'll go to Joel to take a look into the levels. And of course, we'll give you the guess for tomorrow.
There is no doubt what is leading the bus, and it is IWM leading the bus. All the small caps, all the beaten up stuff that's interest rate sensitive, they're buying all that. One thing to consider as you just chase. The IWM has failed up here around this $200 level multiple times over the course of the last 2 years. Go to a 2-year chart. $200 failing in July of 2022. We got up there when everybody thought we were turning around in March of 2023, 199.26. Recently, we got up there back in August, 198.75. Well, we are once again there. It's been a pretty good run for small caps. So actually, you think like, wow, this has changed the tune. And I think it has. But we've had a long ways. You are definitely chasing here if you are buying IWM today, but the chase continues.
Yeah, getting into that monthly resistance. Just looking at the S&P, very limited offers in here. We're just continuing to make new highs of the session, and won't see any offers out of me until we get to 48.08 and a quarter. And that was only a close on February 22nd of 2022. But your next daily high, you knew at true daily high in the market is up at 48.1950. So that's what I'm looking at. And the 50% that I talked about at 45.71, well, that's moved up considerably now since we've rallied another 15 handles. Tomorrow, we're going to get a view from across the pond. Michael Hewson is going to join us and let us know what's he seeing in the European markets and get its take on the U.S. markets as well.
All right, so just to recap the show, of course, we got retail sales that came in over the expectation. That's definitely helping the market out. Initial jobless claims coming in light. And of course, we talked about the major movers of the day. If you guys didn't catch it already, rewind the show. I know that a lot of you guys joined in like kind of the middle of this show, but don't miss the beginning where we talk about the overall macro and of course, the hottest topic of the day. All right, that's going to do it for us here on Pre-Market Prep. Like always, you guys can keep up with all of us. You guys see the Twitter's handles right underneath. Give Joel a follow, of course, at Spoos, Dennis Dick, Triple D Trader, and keep up with Joel on the closing print. Have a good one, guys.
Also, we got Quadwitch tomorrow, so everybody early to bed tonight. We're gonna have a big day tomorrow with the Quadwitch expiration.
Holy.
Yep.
Lots of fun to be had. Get out there, get your trading shoes on. It's good trading right now.
All right, guys, have a great one. I'm Glenn, Joel, and Dennis. Get out of here, guys. You guys can keep up with them, of course. And coming up next, we have live trading. We got a lot more for you guys, and I've been working on a fabulous video for you guys out there. We just mentioned our Santa list, right? Well, why not get ready for 2024's outlook, of course. I'm putting out a video on December 20th. Don't miss it, team. This is going to be with more than 8 experts, of course, and get you guys the outlook that you guys need to get ready for 2024. You don't want to miss it. I will have economists, stats, technicals, stories, all in that interview. You guys don't want to miss that. That's going to be on December 20th as we get to the Outlook video. And definitely smash the like if you guys enjoyed today's show. And don't forget, like always, team, this is for informational purposes only, not to be for investment advice. Opinions do not represent those of Benzinga, and hosts and guests may maintain in the positions and the securities discussed. As you heard me earlier today, I talked about a swing on Lilly and one even on Walmart. So if you want to find out about these swings, how they're doing, and maybe take a look into our trading action, stay right here. This show will get you over to live trading that's coming up next. Let's get after it, team, and see what we can come up today.